Hello, everyone. Welcome to ELI, the place where you get your daily dose of inspiration for entrepreneurship. And today we have with us Mr. Ekalavya Gupta, who is the founder of Recur Club, which is Asia's first trading platform to raise upfront non-dilutive growth capital for recurring revenue companies. Hi, Ekalavya. Welcome to ELI.
Hey, hi, thanks. Thanks. Nice to meet you all. How are you doing?
I'm doing good. How about you?
Great, not too bad.
I would, to start with, I request you to introduce yourself to our audience and give a brief about what Recur Club does.
Absolutely. So about me, I've been an investment professional all my life. Worked across multiple global private equity funds, sovereign funds, and structured credit funds
Mhm.
with the likes of Nomura. Started my career there, right? Like it was a pretty interesting journey in structured credit. Moved on to work at Kotak, one of the largest institutes in India doing alternative investments.
Mhm.
Got a chance to work in the special situation, structured credit, and the private equity fund there. Um, then moved on to be, God was lucky actually to be part of the setting up team of CDPQ's, real estate and infrastructure arm for Ivanhoe Cambridge in India. So was part of the three-member team and got a chance to do a lot of investments across India, Singapore, so all of Asia, across real assets, logistics, data centers, real estate, financial services.
Mhm.
So been a great journey. Worked with a lot of companies, helped them go public, invested in their IPOs, a lot of private equity investments that I did. So have been an investment professional. I've loved professional and private personal investments all my life. That keeps me going. I think started Recur Club in 2021, which is a fintech platform. Started this with one of my batchmates and a very good friend from I'm Calcutta days, right?
Mhm.
Like uh, so this platform, right, like it's a fintech platform. As you said, there's upfronts, recurring revenues into upfront non-dilutive growth capital for companies. The idea to start was, when I used to invest in a lot of companies, I figured out that there is a inherent time arbitrage in which a lot of these recurring revenue companies, right, like a lot of subscription based companies, a lot
Mhm.
of SaaS companies, a lot of tech services companies, right, like there is a time arbitrage in which when they spend money on their customer acquisition cost versus when they receive their lifetime value of the customer, right? And
Mhm.
to bridge this, people were only using equity, right? And what happened as a result was founders were left in single digit shareholding, like 2%, 3%, 5%, as they grow up and scale up, right?
Mm.
Companies have become unicorn, but founders own 2%, right? Like of their own company. They lose control over a period of time, right? Like, and if you think about it deeply, it was not efficient capital stack management. And hence we started Recur Club to bridge this gap. It's been a great journey since then. We work with multiple institutions to finance that via our tech platform. We leverage our technology to get money faster to companies without any equity dilution, right? It saves two most important assets of a founder and a company, which is equity and time, right? Two most precious things, I think, for a
Mm.
founder.
So you are solving for both. Uh, Help me understand few technical things. What's so special about recurring revenue companies? I mean, the problem you are solving, I understand that problem can happen in any industry. Why recurring revenue?
I think a very good question. So, as a business, while we cater to companies from bootstrap to late stage companies, but our core focus has been companies from bootstrap, seed stage, Series A, Series B, right? Like so early on in their journey, relatively,
Mm.
and hence, if you're financing them against something, the predictability of the revenue is very important, right? Like because you are not taking equity. It's not like a VC that you invest equity in 100 companies and five of them make returns for all 100, right? Like some of the bets could go wrong. So you need to diversify risk and exposure as well for the lender or for the investor, for the credit fund, you know,
Mm.
for the investor investing in these. So
Okay.
to manage risk, right, like to a certain
Mm.
recurring revenue companies have high level of predictability in their revenues, right? They have very low churn, right? And hence the probability of that revenue repeating is high. Otherwise, that could be very seasonal or very cyclical or very volatile. and these are not very large companies, right? Like that we are focusing on. So
Sure.
we need to have a way to mitigate risk, and hence recurring revenues make a brilliant option. And also, if you think, right, like recurring revenue is actually coming all around us, right? Like if you see any business, you know,
Mm,
if I see from a consumer angle, right? Like today, I as a consumer use all my subscriptions, my OTT platforms, my music platform like Spotify, Netflix, my groceries on subscriptions, right? Like
yeah.
multiple things. And my even my other expenses, may not be subscription, but like my rent, it's recurring. I'm paying
Mm,
right on a month to
yeah.
month basis, right? Effectively. So my insurance business that I've taken, right? Like it's all recurring from that point. And if I see as a business, all my expenses, right? Like all I use all SaaS tools, my salaries, my rental expense, again, my insurance, right? Like everything, like 70 to 80% of my expenses are recurring. It's no longer one-time expenses, right? Because the
Mm,
world is moving towards there, right? Like, and hence we want to capture those companies early on, right? Like as a business strategy as we scale and grow as well.
got
So
you.
it's world moving there plus better risk management at the stage of the company. I think these are the two primary reasons to summarize.
Mm. So next question coming to my mind, the companies who come to your platform to raise probably debt capital, why can't they go to a bank where probably they can get capital at a lesser rate of interest? Uh, at least that is what I am presuming.
So, I think two, three things. A, the availability of capital, right? Like to all founders, it may not be accessible as well. So we have opened via our platform that access of capital, right? Like instant access of capital, because 95 of the businesses, shut down because of, proper availability of capital at that point in time, right?
Mm,
So I think getting access to the companies at the right time, right? Like in an opportune time in a very fast manner. We unlock capital within 48 hours, right? Like, so it could be a game changer. It is a game changer for companies.
mhm,
So then it's opportunity cost of capital versus what you're comparing. And see, every capital has a risk and return, right?
mhm,
So depending on your financing with for their cash flows, right? Like you don't have, like if you go to a bank, they will take property, they will take shares, they will take, charges on your current accounts, lien creations and things like that. So it's a lower risk and hence a lower return expectation, right? Like money
mhm.
money is not free.
Yeah.
For any investment, there is, risks for return for every risk. So
Mm,
it's what risk that investor is taking and the returns are proportionate. But the cost of capital on a platform is not very high still, right? Like it's an upfront discount of between 8 to 12% on an annualized basis.
mhm,
That's not very high for India. We have fought very hard to get there and get the right capital supply for our companies.
mhm. Got you. When you give capital as a debt, then against that debt you usually tend to take some mortgage or some sort of security. Banks do it through even in corporate lending, they back it against fixed assets. So would love to understand what mortgage or what sort of security do you take against the capitals that you provide?
So the model is very unique to that extent, right? So I think it's unlike any debt, right? Our model of financing is like much better than a debt, as you rightly said, right? Like it doesn't involve mortgages, it doesn't involve share pledges, it doesn't involve warrants, right?
Mm-hmm.
It is as if you are financing your revenue upfront. So basically, what collateral or what security we have, I think data is our collateral, right? Like data is the new collateral for us. We leverage technology to be integrated in companies' financial system, invoicing management softwares, banking softwares, right? And be live, and hence data is the new collateral, and we are financing them against their predictable revenue streams.
Mm-hmm. Okay. Got you. But a little deep, if I can go, tell us about the people who are funding your operation, as in who are putting in the larger pool of capital to be distributed across other companies as growth capital, if you will.
So we work with marquee institutional investors on the platform, right? Like there are multiple banks, credit funds, family offices, certain NBFCs, but we work primarily with institutional investors managing billions of dollars of capital, right? Like cumulatively, they manage around $20 billion plus capital. So we have, and we shortlist. We don't work with anyone and everyone, so we filter and shortlist the right set of investors before we get them on board. So these are vetted institutional investors on the platform.
Gotcha. Uh, Take us to the initial days of Recur Club and tell us how it was built. Like, how did you onboard your first either investor or at the other end, first customer? And how was the platform built? What was the initial hypothesis? And any examples at other parts of the world that you referred to?
I think very interesting journey. It's not that long back, but seems like ages, to be honest, right? Like if I reflect back, started this in April 2021. I think very interesting is how it started. My co-founder, my batchmate, right, like Abhinav, very good friend. He used to work on, with a lot of SaaS companies on the product and tech side. He was working with Gartner prior to this. Uh, and we were just having a chat one of the days when I realized this is a problem for early stage companies and there's a time arbitrage, right?
Mm,
And since he was working with similar companies, he realized that instantly that's a problem that he faces at Gartner as well, right? Uh, we did, and we said, there we go, right? So it was one of the Sundays we met, right? Like in a cafe,
mm-hmm,
and we started working on it from the next Monday, right? Like both of us were so convinced, of looking at different sides of working with different sides of the company. And I think there has been no looking back since then. We hired a tech team on contract since then. We started with 5-6 people that we knew, who bought into our idea very early on, right? Started working on it, and within 3 months we were live. So we
mm-hmm,
start, our first transaction happened in August. So May, June, July was the 3 months that we took, and August we were live with our MVP. It was very fast, very fun days, right? Like to build a startup right from scratch. There's so many things, right? Like setting up a company, getting legal finances started, and at the same time you are doing a lot of primary, secondary research, setting up GTM strategies, which were right from get go, just calling people. That was the GTM strategy when we started, to
mm-hmm,
actually formalizing it across, different channels in which how you source, how you manage, how the funnel works. It has evolved so much. But I think what I've loved most is how the interplay between, different people that you get in, right? Like the alignment. I think it's the people. Uh, it's your team, right? Like I think that makes or breaks a startup, especially early on in the journey. And it's that fun that you have with them. It's the journey, that we have relished as well. The fun times that we've had, the tough times that we have had, right? Like it'll be always that you'll start your day thinking that you'll plan and do something, but 80% of it doesn't work like that, right? Like something or the other abruptly comes, and that's the fun, right? But I think one thing that has worked for us, is we have been very still relatively more process oriented, right?
mm-hmm.
But otherwise, there's so many things that happen in a startup, right? Like it's very easy to get deviated.
Yeah.
Everything seems so lucrative because you're at zero, right? Like so, every path seems very lucrative at times, but it's very important to have that focus and prioritize. I think what we have realized is the two very important things to maintain. Um, it's not easy, but especially when team starts growing, expectations start growing. But I think that's the challenge. That's the fun part.
You said data is your collateral or your the security that you use to ensure that the investments you are making they're good investments, and how you collect that data is from the company's financial systems, invoicing systems, and other platforms you integrate with. Would love to understand what sort of data you collect and what models you use to evaluate whether a company is is a will pay back the amount you are investing, and I mean the other aspects involved in it. Tell us about it.
Absolutely, and that's where our financial models come into picture, right? Like the AIML models that we have built in, to read not only companies' data but a lot of alternative data where we integrate with, right? Because like a lot of third-party integrations, including GST, MCA websites, publicly available that we fetch automatically, right?
Mm-hmm.
Indian Glassdoor, a lot of things that we do. to make our models more robust and to give us good indicators, because the underwriting has to be very strong, right? Like at the end of the day, if someone is financing through a platform and we are guiding them or giving them some guidance through our underwriting, right, or financial analysis or models leveraging technology, right, it is our fiduciary duty, to be at the right to be doing the right things when we are doing the investment analysis, probably. So that remains the core. Obviously our team is from the background. I've done that. That's helped to build good models, right? Like, and we've also had expert team in the investment side, and we are using, a lot of data engineering, data science, to make our models more, machine learning driven. It's always a gradual process as you collect more and more data.
Mm,
uh, and see, the problem that has happened, right, like in all kinds of fixed income investments, is they never had access to data. They never were asset monitoring these
mm,
companies. It was only, you finance and then you get your payments back. If you don't, then you try and see what's your security. But the moment we get integrated with the data sets, right, we know what is happening in the company and we can preempt quite early on if there's something that's going wrong
mm,
and work with the company. And that's where we have also become like a full stack financial suite for companies, because we help them in certain advisory services, how to manage, grow their business, because a lot of people like that. So we have partnered with a few advisors, startup consultants, to get them the right thing and
mhm,
leverage technology to give them data driven insights,
mhm.
right? Like to help them to grow and stabilize their business. I think which is very important.
Some examples can you give, like, what indicators, what red flags that you see on your platform, and you tell to the founder, hey boss, you are not going in the right direction, or this metric is not in line with what we expect. So some examples.
Yeah, absolutely. Why not? So I think we work with a lot of SaaS companies. So I think churn, net revenue retention, lifetime value to customer acquisition cost. Like I know, like I'll take an example. There was an edtech SaaS company.
Mm,
They had a churn. The growth was great, right? Like they were growing, I think 100% plus year on year. They were a $1.5 ARR company back then. Now they're a $3 million ARR company. In the last 12 months, they've grown 100%.
mhm,
Everything is great, but the churn, the churn rate, right? Like while their overall growth was good, but the churn rate was pretty high at 70%, right? They were getting new customers, but the churn was very high. And the industry benchmark for similar set of companies were around more like 40-45%, you know?
okay.
So we had the benchmark analysis because we had analyzed so many companies' data, right? Like, so we could guide them that
Mm,
while your business is growing great and doing good, but I think you should do something on your churn because it's pretty high than probably the industry average. So they started focusing on churn analysis. We had some people, who helped them, work with them, because every dollar saved is every additional revenue earned, right? Like with the same set of customers, they could grow their business even further.
right.
So that was a great win, right? Like, and because because of that, you know, we could finance them even more. So it also helps us indirectly, directly. We mitigate risk because the company's operational parameters improve, right?
Mm,
And we could catch this on early on because we were connected to their operational data as well. Otherwise, we would not have even known. We would have seen that the revenues are growing great, they are growing good, everything is fine, we are getting our money back, and one day probably,
mhm.
hopefully not, but probably something could have gone wrong with that company, right? Like, so it's important to understand the operational metrics, benchmark it, and create a strategy early on. So we help them with that, and obviously they are the experts then, right? Like, uh,
Mm, got you. Uh, would love to understand what are some of the biggest challenges that you faced while building and growing this venture.
yeah, a lot of them. I think I think the stage at the pace at which the startup journey moves, I think is phenomenal.
Mm,
So you were building something and started with something, you know, the way the team grows, the way alignment of team grows, the way to manage the team, right? Like, because there is unpredictability, uncertainty at times as well, right? Like, so you can't just hire anyone and everyone, right? Like, so you need to get the right people at the right time, right? I think, and balancing that is very, very important because the pace is so fast, and one day sudden event could happen and you can just stall, right? Like, for no reason. So I think managing that has been a tricky thing, to be honest, right? Like it's not easy. And I think also, as I was mentioning, not deviating, because as you keep on scaling, I think
Mm,
the second thing is prioritizing it the right way, because a lot of opportunities seem lucrative, right? Like, but which is the best one out of it? Go after it, right? Like, so I think managing that at every point in time is also very important, and teams moving together in the right direction, right? Like, so alignment, strategy, etc., is very important in a startup, right? Like people say that strategy is very important for late stage companies. I think it's more important for early stage companies, right? Because if your teams are not aligned on everything, right? A tech or a product team could be working on something else versus a business development team that is originating somewhere else. If they're not aligned, right? Like things may not move at the speed at which you want to. So very important to have a central control which can guide and move everyone along. I think that's the third learning that I've had. And these are the challenges we have faced practically. We are learning, obviously trying to improve. When I started, I was speaking to a lot of my founder friends, right?
mhm,
Like, how did they go about it? All of them said it'll not be easy, but they recommended me certain tips and tricks at times, to read a lot of their industry, how to manage, how to do a lot of things, that I think that really helped. So I've gotten back reading as a habit. I think with thankfully I'd stopped for long years,
mm.
after my college, but I picked it up again, and I'm very glad I could, because I've really learned and implemented a lot of things, from them, which seemed to be working. But let's see.
Any books you would like to recommend to other entrepreneurs?
Couple of them actually. I was reading a book called How Full Is Your Bucket.
Mm,
I think it's a great book, because it tells you, as an entrepreneur, as a founder, one would always be, short in time.
mm,
So it's very important, again linking to prioritization. It talks about when you talk to someone, right? Like, do they drain your energy or do they fill your bucket? Do you feel happy? Do you feel satisfied after talking to them, or does it like too much draining your energy?
mm,
Because I think the most important thing that you need to know as a founder is, you'll be talking to external people, you're talking to equity investors, you'll be talking to internal employees, you'll be talking to your customers, right? Day in, day
right.
out, right? So how to manage expectations, how to speak everyone's language, adjust yourself. And if you don't, and if someone just trains your bucket, just move ahead, right? Like just cut them off in your life.
Mhm.
I think very important. uh, and I think a couple of other interesting things that I've read, right? Like performance management, like Harvard Business Review book on performance management helped me a lot as well. um, I think. And definitely, yeah, the 0 to 1 journey at times, which has been interesting.
Gotcha. I just have one last question for you. What
Yeah,
would you say is the meaning of entrepreneurship for you? How would you define the term entrepreneur, or who is an entrepreneur as per you?
I think someone who lives by the passion, who truly believes that something can be turned around, uh, strategizes well, right?
Mhm,
And makes other, align along with them. Others could be the team, investors, external shareholders, right?
mhm.
And remember that it's a marathon again, right? Like, so there will be extremely uncertain times, but just be at it, just be there. I think uh, that is what truly differentiates, right? Like, I'm also here, I've also heard this, but I think in our short stint, I think that is what is truly making a difference.
Mhm. Got you. So, on this note, I think we have come to the end of our session. Thanks for your time, Ekalavya. And it was a pleasure to have you on our platform.
Thanks, Priya. Lovely speaking to you. Thanks.
Thank you.
Have a good day. Thanks.